Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 12th of May. I'm Daniel Lam, your host for the podcast. It is a fair statement to say that the easy money has been made in this strong rally in US equities since the height of the Middle East crisis in March. Yes, we know that fundamentally, US earnings have been strong and leading equities there higher. Well, what about the positioning? Let's take a look today. US equity positioning has recovered to close to +1 standard deviation, the highest since the start of the Iran war. The recovery was sharp when it went from minus 0.6 standard deviation in a matter of weeks. The easy re-risking seems to be done now, with flow risk turning a little bit more two-way. Now historically, at such positioning level, 3-month S&P 500 forward returns is modestly positive, but the distribution of returns is becoming much more balanced between upside potential and downside risk as positioning grinds higher. Now looking from the flow perspective, the easy pickup from CTA, i.e. the trend following funds, and long-short investors have moved up very quickly, while retail buying is slowly getting more positive. To get to +1 standard deviation requires either those already sitting long to add to their positions or more retail buying. Now, this is not a low-hanging fruit as it was a month ago. In fact, trend-following funds are already showing a small negative bias on days when there is a downtape, there's greater selling versus buying on an uptape. Institutional net option flows has picked up to its highest level since early February this year, running at around the 95th percentile on recent daily and weekly readings. This is the type of activity on par with historical bull market regimes. So, under the current uncertain geopolitical situation, this is susceptible to slowdown, especially the fact that in terms of call-put ratio, investors are close to maxing out on the key US growth plays like the Magnificent Seven stocks. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.